All right, folks, Cam Hawkins here from Trading Up. Welcome to this video, which is part 2, a year on, with Philip Blom, who's now 16 years old. So if you watch the 15-year-old video, this is what he's doing at 16. So welcome back to the show, Philip.
Thank you. Thank you for having me again.
Well, look, guys, today what Philip's going to do is give you a quick update as to what he's been doing in the past year and almost probably a half, even maybe a bit more. And then we're going to jump into a price chart and see how he's simplified things down a bit. And he's going to go through a couple of trade examples. So first of all, Philip, what have you been up to in the past year? How's trading been?
Trading has been fantastic. My life has been overall very fantastic. I've been working on things outside of trading as well, so excited to launch my upcoming projects.
Awesome. Cool. Well, let's jump into a price chart and see what you're doing these days. Hey folks, my sponsors City Traders Imperium have just launched some amazing changes to their funded trader program you got to check out. You can now skip the whole evaluation, trade gold as well as Forex, plus they've increased the drawdown you're allowed in both the evaluation and when funded. With C2A, it's even faster and easier to reach up to $4 million in funding with a 50 to 70% profit share. Click the link in the description to find out what else has changed.
Okay, so I'm going to go over two pairs today. Of trades that I've personally taken and I've shared on social media, the before and after results. Now, the first pair, which I did do a full analysis on my Instagram page, is USD Swiss Franc. Now, I'm going to go over these pairs purely based on price action and technical analysis. Obviously, I do remember that there was some fundamental analysis and fundamental news releases which were involved in my decision taking when placing these trades, but as of now, I do not remember what they are. But my first trade, which was taking on USD Swiss, was a short trade right here. Now, to keep it very simple, we had just a couple of confluences, which is one of them, a break and retest of our ascending trend line, a come back to our 200 EMA on the daily time frame, and what I believe was a 38.2 fib retest. So we had some nice confluences to support our decision to take a short trade. Now, I can't remember exactly what it was, but there was a positive outcome or expected positive news release on the Swiss franc, which obviously gave me one more confluence to enter a short trade on this pair. Now, my risk reward ratio looks something like this. My entry was at just above here, and my stop loss was over the 100 EMA, I think, to round it up 15 pips. And my take profit was actually around these lows, but as price was developing and as I was keeping up with the currency strength chart and the US dollar, I didn't really see the US dollar being weak for so much longer. So I adjusted my take profit to around 50 pips, if I can remember correctly. This trade right here gave us a 1 to 3.31 risk reward ratio. At the time of this trade, I was risking 2%, still 2% per trade. As of today, I've modified that a little bit to 1.5% per trade. So at the time, 3.31 risk-reward ratio would have given us a 6.6% gain on this trade. So technicals and fundamentals very solid on this trade right here. Now, the second trade which I took on USD Swiss, which I also posted on social media before and after, is this buy right here. Now, I remember we had some bullish news on the US dollar, which made us break all of these barriers, these what can you call them? Barriers. We broke to the upside, not only this ascending trend line, however you want to draw it. This is the more accurate way to draw it on the wicks. Broke a descending trend line, made a nice break and retest of the trend line plus the 200 EMA, as you can see clearly here. And then we broke into another key level trend line of this one right here, which had multiple touches, which also was our short entry was based off a break and retest of this ascending trend line. So our three confluences, which I believe I had on this trade, this long position right here, is that first of all a breakout of our descending trend line, which means that our short momentum has a switch now. We're looking for longs instead of sells or shorts. We had a break and retest of this key level trend line right here. And we had a touch of our daily 50 EMA plus, which was where my entry point itself was based on. We had a nice touch of the 38.2. So entries very clean. Stop loss under the 100 EMA. Once again, a 15 pip stop loss. Now, my target initially was around 100 pips to these highs right here. As you can see, it's a very fair target to have, as we can predict that price will react in this level in one sort of way, which it then did. But I wasn't really sure about this trade regarding the Swiss franc strength, and I was looking for potentially trades on other pairs that went against my my bias on the US dollar. So, for example, for this trade to work out, I would want the US dollar to be strong, obviously, as it is the base currency. And I was probably looking for a trade where that was set up, another pair that was setting up where I would want the US dollar to be weak, which goes against each other. So I ended up closing this trade early of a 1-to-1, I think, so a 2% gain. But just the technical analysis itself is super on point. Even though I couldn't take full advantage of my analysis, unfortunately, this time. But it happens. So that was my my two trades on USD Swiss franc right here. sells, and then longs. So what I'm waiting for currently is, I missed this because I didn't want to trade NFP on the US dollar. But just to prove or just to show that these key level trend lines or levels in general are valid, you can see that price once again broke back under this ascending trend line, retested it, plus the EMA, and boom, you could have found a nice short entry. Now, the next thing I'm looking for when it comes to the US dollar would be something like this. Touch of the trend line, catch a couple nice movement to the upside, maybe back to this level, and then short. We already had our 3 major touches on the trend line, which kind of indicates to me that it's going to be hard for this level to
hold.
To hold, exactly. Yeah. To hold the US dollar. So that's my outlook for USD Swiss. Now, I was also going to go over a couple of trades I had on AUD NZD. Starting from the weekly time frame. Simple trades. First trade I had was a buy on this third trend line touch right here. Boom. Nothing more to it, to be honest, only a trend line touch. That was all. Now,
and do you set a limit order for those trades, or do you enter it at the market? Because it's a weekly level, so I'm guessing it's...
It depends. It depends, really. Sometimes, when it's a very obvious level, I would have a limit order. When it's kind of me looking at the market live and analyzing what the candles are doing, then it kind of depends if I want to enter, I'm waiting for a candle close or whatever. But in this case, I did open it manually. So just a clean weekly trendline touch, nothing more to it. I didn't expect too much from this trade. I didn't predict that we'd go up almost 200 pips. I took a short. My entry was here. I took a short 25 pip target back to these low. It could have very well been possible that we just have a comeback here and then rejected and then broken this trend line. So there was no need for me to really risk catching a major move. I had so it was like a 1.5, I believe. So a 3% gain. Now, anything from this point on, I adjusted my risk appetite to 1.5% per trade. So obviously my returns are going to be a bit smaller, but my losses are going to also be smaller. And with that, my risk-reward ratio, I think my average risk-reward ratio per trade has been also drastically modified due to the fact that I don't look to spot major trades anymore that often. I don't try to spot trades that will
go to the moon.
Yeah, I kind of play it a bit more safe. I look for quick in and outs. And I think really in the long run, you'll have a much higher chance of being right when you spot a bit smaller moves than trying to spot the really big ones like I had a tendency to do a bit too often before. So yeah, that's why I adjusted my risk a bit. Because my targets are smaller, but so are my stop losses. So that's trade one on AUD NZD, 3% gain here. Now, I did give all my, I did share on social media what my plan was for AN after this point. It was to get a third trendline touch and 50 EMA touch short, and then long it from there on 38.2. So if we take it to the 4 hour, I had a 15 pip stop loss, or even less, I don't remember. And I closed it on 20 pips, so 1.3 risk reward ratio, almost a 2% gain. And then I had buys on this area, also shared on my social media before and after. Now, reasoning for these sells, which I just went over, to be fair, real quick, is just a third trendline touch plus 50 EMA. 50 EMA touch, nothing more than that. So let's go back to the 4 hour. So reasoning for this buy right here, 38.2. This was my plan all along because I was long on the Australian dollar, but just technically, I figured that we might get a bearish reaction around this third or fourth descending trendline touch. So I had my buys here. Targeted these this high right here, which makes perfect sense. And I think my stop loss was 20 pips or 25, can't remember. So this trade was really solid. Shorts on the trend line, long on the 38.2 fib plus the 50 EMA on the 4 hour time frame. Now here comes the trade that I was waiting for all along, which I had my sell limits on. Really one of the best entries I had in a long time, I must say. So what you can see here, we had non-stop bullish momentum without any stop. And to be fair, at the time, I cannot remember very precisely, but I figured that there was no reason for the Australian dollar to be that strong and for the New Zealand dollar not to show any strength at all. So and then we came up to this area. We obviously broke the descending trend line to the upside, but then we came to this area of volatility, as you can see, with a lot of wicks. So I knew this area would be a sensitive area, an area of interest, and I got my entries right on the tip, right here, of the 61.8% fib. Got it a bit higher. I got shorts in there, which ended up perfectly. I can remember my stop loss was very tight because I didn't expect AN to go really any higher than this. So I believe I had a 20 pip stop loss or something like that. Targeted the 38.2 on the upside because once again, which I didn't mention actually right now, but when I'm in either a short or a long trade, I always want to put myself into the perspective of a
The opposite.
of the other side,
Yeah.
of the opposite. Yeah, exactly. I want to put myself into the perspective of a buyer if I am in a sell position, to always expect what's coming, or always be prepared for what's coming, right? So to put myself into perspective of a buyer, since I am in a seller, I want the sales to obviously go well, but I need to be aware that everything will not always be in my favor. So to put myself as in this perspective of a buyer, where would I look for long positions? Well, obviously, this looks like a interesting area. 38.2 fib plus the 50 EMA, and a break and retest of this descending trend line. So this is where I would get in as a buyer. So having that in mind, that's where I want to put my take profit, right? And what happened? We go to this area of interest, of buyer's interest, and we get this nice movement, boom, to the upside of 70 pips almost. Now, I didn't have, I had this marked up actually to get in a short and then get in a buy directly, but after this candle, this red candle right here, I didn't really have the balls to get in.
Yeah.
I was happy with my profits from this short, and I didn't really after this candle especially I wasn't ready to risk it all, but just shows you that you need to be prepared on both ways and not only look in the way of your own bias.
Brilliant. Hey guys, ever wonder what broker I use? Well, I use these guys, Hanko Trade. Look, it was a no-brainer for me because I was looking for a broker with really good trading conditions and one without any leverage restrictions. Look, also, by joining Hanko Trade, I was able to cut my cost of trading significantly with their super low commission of $1 per 100K. Look, if you want to find out more, check out hankotrade.com, or there is a link in the description. Look, Philip, that was fantastic breakdown. I love how you've simplified things so much from the first video that we did, where you had your golden zone and all this sort of stuff. So to wrap up, what's the best way for the guys to get hold of you?
I only have Instagram. My username is K4X, the number 4X, and then 3 underscores. That's the only way you can get in contact with me.
Brilliant. Well, look, guys, what I'll do is I'll put a link to that interview with Philip that we did over a year ago now. You'll get to see the other video if you haven't seen it already, when he was 15. He's now 16. So go and check that out. There'll be a link under this video here. Guys, also remember, if you're looking to automate anything that you're wanting to do, then I've got my Robot Builders Club, which I can teach you how to automate either fully or semi-automated strategy. So go and check that out as well. Links under the video for that. And hit subscribe, hit like, click on that notifications bell, and click all to get future videos like this coming your way. All right, thanks for watching, guys, and we'll see you in the next one.